Hello, Jason from Fix My Books. Canada exit taxes. Quite a complicated question. How do tax treaties affect my tax situation? Well, tax treaties play quite a critical role for individuals and businesses in Canada as well as outside Canada. And they're really mechanisms to help avoid the issues regarding double taxation, determining your tax residency status, and also allocating the taxing rights between countries so they're not, arguing with each other and fighting. And so it really helps avoid, I don't like the word avoid, but remove, I guess, double taxation. So there's two types, right? There's the credit method, and that allows for tax credits to be applied. So if you pay tax in one country, the credit can be applied to another country, and the exemption method. So some treaties will provide an exemption for certain types of income, and they just won't be taxed. They also really help, and this is important, determine tax residency. So they have something called tiebreaker rules in them, and there's certain factors which will determine whether or not an individual business is regarded as a resident in one country or a resident in another country, as well as deemed residency. And then you also have the allocation of the tax rights. So where are the business profits going to be taxed is usually the major one: dividends, interest, and royalties. So they often set different types of rates at which these are going to be taxed. And you've also got capital gains. So tax treaties will specify which country has the right to tax the capital gains. There are special provisions within each treaty. So there's something called non-discrimination. So tax treaties include non-discrimination clauses, and it helps ensure that nationals of one country are not subjected to more burdensome taxation in another country than its own nationals, right? So it tries to be equitable and fair between the different types of people. And there's mutual agreement procedures as well. And I don't want to get into that, but really they're just for resolving tax disputes between the countries. So, you may have like a massive corporation and the governments are arguing as to whether or not this company is going to be taxed in country A or country B. So whilst it seems a very business-oriented discussion that I'm having now on how these affect your situation, realize that especially the residency portion is going to affect you massively if you're exiting Canada, or if you're entering Canada for that matter. If you're moving to a new place, you're going to have to look at the treaty and see if there's even a treaty between Canada and this new country you're moving to, and determine from that what your residency is, which one is going to be your tax residency home, as well as how any sort of income or capital gains is going to be allocated and taxed between the two countries. So it's never really clear cut. It's always messy. Finding that it's a bit too messy and you are not really understanding these things because it's full of a lot of legalese, feel free to reach out to us. My name is Jason at Fix My Books. And please like, share, subscribe. Really helps us out. And if you know anyone that's going through this situation, feel free to send them this video. Thank you.